money is emotional. We all have a mindset and an approach towards money. And actually, a lot of research shows that 90% of that mindset is developed by the age of 7. They think they are making a profit on a certain service. And when we actually dive into it, they're not. In some cases, they're losing money by delivering the service. So just because it's bringing in a lot of revenue and taking up a lot of your day doesn't mean it's what's delivering your profit. So you need to be really clear on where your profit's coming from in your business. You don't have to do it all. As a business owner, you want to wear every hat, but it's about knowing what to outsource and when.
Hi everyone, welcome to the Reclaiming Bossy podcast. My name is Mahika, and on today's episode, we're going to be talking about all things accounting. Now, I know that's not very sexy, but it's so important for your business. And if you're a business owner watching this episode, this is everything that you need to know that you might be too scared to ask. There are no silly questions. I've got all of your silly questions on this laptop, and we're going to do a deep dive on everything to do with contractors, dividends, salary, taxes. So stay tuned, comment any questions you have below, and I hope you enjoyed this conversation. Thank you so much.
Hello.
I'm so happy to have you on today.
Can you
please
so
start by introducing yourself as if you're speaking to someone that you've never met before?
Yes, absolutely. So I'm Emily Vass, and I'm the founder of Nourished, an accountancy firm designed to just make finances feel good again. And we answer all of the silly questions that you feel like you have about finance so that people can grow and scale their businesses with confidence.
I love that. And because I want this conversation to be accessible and interesting for everyone listening, let's do some jargon busting first. So what are some important words that you think are going to come up in this conversation that need to just be defined so that we can kind of talk about it easily?
Good question. I think even the simplest stuff can get really confusing. So for example, in the UK, a sole trader literally just means you're working for yourself and is used really interchangeably with self-employed. So they're the same thing if you ever get confused. A dividend is an amount of money that comes out of your company after you've paid tax on your corporation, like on your company profits. Again, one that confuses people a lot. And I think really when it comes to jargon in finance, it's about learning the jargon that matters for you and your company and where you're at. Because on day one, a lot of people think that profit and loss is jargon. Profit, it's literally the money that you make. So income, less expenses, which might seem obvious to a lot of the watchers of this podcast. But if you're on day one, that's jargon. So it's about learning the jargon that's relevant for you as you grow.
100%. And before we get into everyone else's businesses, let's start with you and your journey into starting your own business. So what inspired you to leave your corporate role and start your own firm?
I'd worked in corporate for about a decade, and I'd worked in a variety of types of accounting, but I also have a chronic illness. And for me, working a classic kind of 9 to 6 hustle grind in the city just wasn't working anymore. And although I love city life here in London, I knew I needed something different. So I left my job just before my wedding in 2024 and kind of thought I'd go back to corporate, but do something different, but instead decided to start the business I'd always wanted to start, but it's so scary to bet on yourself and make that leap. I've got so much respect for everybody that does that in business. And so I gave myself 6 months to see if I liked it, give it a go. And by the time that 6 months was over, I had a brand, I had lots of clients and was considering kind of growing and hiring, and the rest is history, really.
That is so inspiring. As someone who kind of had a similar journey of just like betting on themselves and giving them a little bit of a timeline, I completely understand. And I think the make or break is the finances, right? Mm-hmm. If you can continue after those 6 months, it's whether you have money in your business or not. And that's often something that's the unsexy bit. That's not the brand building bit. That's not like the bit that you see on social media. So I'm really excited to have this conversation because I think it's going to give people essential tools around how to do that. A lot of people are too scared to start businesses because they think they're not money people or they're not financy people. As an accountant, what would you say are the ingredients that you actually need to start a profitable business if you don't have a lot of experience in finance?
I think the best thing that a new potential business owner can give themselves is a runway. I think the thing that causes a lot of businesses to fail, especially early stage, like you mentioned, is that fear of how am I going to pay my bills this month? And I think it can be really, really useful before you make that leap to potentially quit your job or start a business to try to build yourself some form of runway. Now, what I mean by that is enough money to cover your necessary expenses for a period of time. And the time period really depends on you and your appetite for risk. That might be 3 months, 6 months, a year even, depending on the kind of business that you're going to try to start, so that you know that during that time, you've got yourself covered. You can cover your bills and you can really focus on growing that that business without a pressure to extract money too soon. Because often if you're too desperate for cash at the beginning, you can make really short-term decisions that don't work for you in the long run. But giving yourself that kind of space, that breathing room, really lets you make better decisions to set you up for success in the long run.
100%. And aside from creating a personal runway, I think one of the things I learned through you is around creating a business runway as well.
Definitely.
And understanding a little bit more about like what a burn rate is and how that works. So how can you set up not just a personal runway, but one in your business, so you know all the money that's just sitting in your bank account for your business is not equal? There's different pots that need to be allocated for runway, for tax, for whatever. How can you kind of plan that into a budget as well?
So I could never run a business from one bank account. I know some people do, but honestly, for me, that's like running a business with a blindfold on. I find it much easier to look at money in pots, whether that's literally separate accounts or certain banks allow you to put money in pots and saving spaces and things as well. And I think the key really is going, rather than opening your bank account and seeing, let's say, £10,000, you know that 5,000 of that is actually tax that you're going to have to pay at some point. And then maybe you also want to save some money for costs that you know are going to happen in the future. So for example, I have a pot where I save for tech, because if my laptop broke tomorrow, you betcha believe I'd be straight to the Apple store to buy a new one. So I put a little bit of money each month into a pot that builds up and pays for tech when me or my staff need something new. Mm-hmm. And you can do this for so many different areas of your business, so that those big lumpy costs like a brand new laptop or maybe your business insurance, anything you pay for annually, is covered by the time that you get there. And then the other part of building a business runway is, imagine something happened to you tomorrow and you couldn't go to work. How long can your business cover its costs, or are you in trouble immediately? And it is much easier and less stressful to run a business when you have savings within it that can cover your business costs for a period of time. Again, aiming for kind of 3 months is a good target to start with. And in the long run, depending on the style of business that you have, building that up can be useful.
What I love about this is that it's kind of, as you said, taking the blindfold off. And I think a lot of people, I put my hand up, I'm top of the list, was really scared. The first year of running my business, I could not tell you exactly how much money was in my account, how much money we were spending each month, how much money we were making each month. It was very like vibes based, especially because I had this fear of like, I'm not a financy person. And I think through simple templates around budgeting, around how to kind of allocate stuff, it's become way easier and I feel way more confident about it, and it's really helped with anxiety. And one of the first things that really helped me was your approach on budgeting. So can you please share a little bit around how to create a budget? Because all of the traditional advice that I see online is for people who get a salary. They get a fixed amount of money every month, and it's kind of like, this is the percentage for this is the percentage for that. But when you're running a business, sometimes you make different revenue each month, and sometimes you're not even paying yourself a salary at the start. So how can you start thinking about budgeting and managing all the money that comes into your account in a sustainable way from day one?
I think the key when you're making a budget is to not focus on the revenue targets that we all see over social media and LinkedIn, 10K months, etc. Those are cool, they're glossy, but they often don't tell the big picture. So I instead build a budget backwards. So I start with thinking about, what do you need to pay yourself? And for most people, this comes down to a few different numbers. You've got your absolute bare minimum. That's what do we need to be taking out of the business to pay your bills, to make sure that we're continuing to grow that runway and that we're not having to dip into savings to go to Tesco and buy our weekly shop. Then there's your market value. This, for most people, tends to be the amount that they could earn if they went back into a traditional role, or the amount that they'd need to pay someone to come in and do their job for them. And unless you're able to take that, then really you're underpaying yourself and you're kind of kidding yourself a bit on how much the business is really turning over in terms of profit, because you're not paying yourself fairly. So that's the second number to try to work towards. And then lastly, it's then that kind of more vision board number. None of us really set out to start to build businesses to take the bare minimum. There's probably a number that most people have in mind that would kind of unlock their ideal lifestyle. And that's the kind of third number that you can aim towards. So once you've picked the number that you're targeting, then think about the expenses that are going to be required by your business to make that happen. And that will vary massively depending on the style of business you have. Like a product-based business is going to have a lot more costs, stock, that kind of thing, compared to a service-based business. But think about those costs, the fixed ones, the variable ones, the ones that happen once a year, and map all of them out. And then once you add all of that together, you can get towards a number that you're going to need to bring in sales to make that possible, to cover those costs and to pay yourself the number that you're targeting. And then you can think about how to make that happen, whether that's sales targets, looking at your products, thinking about your pricing, and trying to find a way to build towards that to make it all work.
Yeah, I love that approach, and it seems so simple when you say it, but I spent the first year of my business just making random monthly revenue targets. Like, I want to make this much money this month and it was, again, very vibes based because I didn't know any better. And it's actually just sitting down and realizing this is how you structure in a way so that you can sustainably do it. At what point should a founder, I know this really depends on the type of business that you have, so I'd love to unpack the nuance. At what point does it make sense to start paying yourself a salary? And at what point does it make sense to get an accountant? Because I think that a lot of businesses make the mistake of doing both things too early or too late. And there's loads of pros and cons around that as well. So talk us through those two big decisions.
So there's a difference between paying yourself a salary and taking anything out of the business, just to get clear on that. A salary is something that you can pay yourself via a properly declared payroll from a limited company. If you're self-employed, then you're not really paying yourself a salary per se. You're just withdrawing money from the company, which you can do at any time. I think in terms of when you should pay yourself, it does depend on the type of business, but I think sometimes founders actually wait too long to pay themselves. And certainly in some types of businesses, it's very possible to pay yourself quite early. And actually, in some cases, you need to in order for it to be sustainable. So I think it's about being aware of your situation and the market and the type of product that you're building. You know, if you're pre-revenue, then you might be in a situation where you to work a little bit longer before you're able to pay yourself, and that's okay. But it's about being really clear with yourself about what the plan is to get yourself to a place where that changes.
And at what stage does it make sense to get external help through an accountant? Like, if you don't feel confident doing everything yourself, at what point do you DIY and like try and figure out the basics, first steps yourself? And when do you go get external support?
So if you're a sole trader, you can claim up to £1,000 of expenses as a trading allowance. So if your expenses are very low and you're earning a small amount of side hustle income, doing your own tax return is totally possible and probably more cost efficient. But really it's at the point where you no longer feel confident with the compliance side of your business, or where you feel like you need an expert to make you feel more secure with what you're doing. We have people on our books that earn as little as 10k a year as side hustles, some even less actually, but they don't want to have to do their own tax return and they just want a bit of guidance. Equally, we have people that come to us that are about to hit the VAT threshold, which is 90k, and they've been managing themselves up until that point. Sometimes it's cleaner than others. Maybe they should have got an accountant a bit sooner, but certainly when you're approaching tasks that you really aren't sure about, that have a lot of compliance like payroll, getting some help is a good idea. For a lot of business owners, accounting is really far outside of their zone of genius, and actually they can get help relatively affordably and free up the time to do things that are going to deliver much better return and revenue for the business. So you don't have to do it all. As a business owner, you want to wear every hat, but it's about knowing what to outsource and when.
And how do you set up your finances in a way that if you're still waiting to get an accountant, it makes it easier? Like, there's some people, as you said, where it's really chaotic because there's like a Google Drive with some receipts and some random stuff and you have to go through bank statements. What are different ways that you can kind of be on top of everything so the transition is easy?
I think the absolute simplest setup includes 3 things. You want a separate bank account for all of your income and business related expenses to go through. That doesn't have to be a business account if you're not a limited company. There are accounts for sole traders that are an option too. You need to be saving for tax, ideally somewhere separately, be that a savings account or even just a separate pot that you can squirrel away some money so that when HMRC comes knocking, you're not scrambling. And then lastly, you need some way of tracking your receipts and the expenses and the documents that go alongside your finances. Now, you can start with a spreadsheet in a Google Drive, especially if it's a really, really small amount, but it's a very good idea to switch to accounting software when you can. A lot of the options that are cloud-based are really relatively affordable, and the tech that's built into them makes keeping track of all of that kind of stuff so much easier. So the invoicing, snapping photos of your receipts can all be done easily and on your phone, which is a game changer.
Thank you. That's so cool. So we've discussed budget. Let's talk about tax. There's lots of different types of tax. And I feel like when you're starting out, you don't know which ones are relevant to you, which ones you actually need to pay, when you need to pay them. I probably shouldn't say this because I do have an accountant, but I still don't know when I'm actually supposed to pay my tax. I've just kind of like left that to be, you tell me when I'm doing it. But what information does every founder need to know about when, how, and how much tax they're paying?
So let's start with personal taxes. So this applies to you whether you're an employee, you're self-employed, or you're a director of a limited company. So we all pay personal tax on our income. So income tax, national insurance, and then you may make extra contributions to things like student loans if you have them. And that either happens through your payslip, through PAYE, or once a year on your self-assessment tax return. They have to be filed by the 31st of January after the end of the tax year, and then you pay tax typically twice a year in January and in July. Then if you progress to having a limited company, your company also pays tax. And in your company, you pay corporation tax on your profits. So that's what's left after your income and expenses. Once you've paid corporation tax, then the stuff that's left after that is then available to be paid out as dividends. So that's the pot of money that's left at the end. Then the other one that you probably need to be aware of as a founder is VAT. So this applies to either sole traders or limited companies if you've earned more than £90,000 of qualifying income in the last 12 months. And really importantly, this isn't based on financial years or the calendar year. It is based on the last 12 months at any time. So that is a number that you really need to be keeping track of in your software, especially if you're getting close to hitting that 90K.
And you mentioned dividends, there's dividend tax as well, right?
So you pay tax on your dividends through your self-assessment. So you pay income tax on your dividends.
Okay, because are they different rates? This is something that's a little confusing.
It is a lower rate. So if you think about it, that money is coming out of your company after you've already paid corporation tax on it. So in order to make it fair, because you've already paid potentially up to 25% corporation tax on that money, dividends are taxed at a lower rate. So 10.75% if it's in your basic rate band, or higher rates if it's in the other bands.
And we've discussed the main ones, but are there any other sneaky taxes that people should be wary of, or are these the main ones that will affect them at different stages of their business, and then it's case by case?
The other one that can catch people out is capital gains tax. So this will apply if you, let's say, buy some shares outside of an ISA and they perform well. When you sell them, then you'd potentially pay capital gains on that growth in the value of the asset. It can also apply to things like if you're selling a property and it's your second property, but it can also apply to when you exit a business. So it's worth bearing in mind before you make any large investments, understanding the tax implications of those and chatting to your accountant. For example, something like buying a house that you rent out. If you then later on decide you want to move that into a limited company, that can have some pretty big tax implications. So it's worth planning for things appropriately. And of course, inheritance tax, if you're at an age where that's relevant to you. If you've got a business and you're trying to plan on how you could pass that on to the next generation of your family, some planning there is definitely useful.
That's so interesting. Thank you so much for sharing. So since we've discussed the different taxes, let's discuss the different ways that you can take money out of your company. So as a founder, there's income, there's dividends. How do you decide what the correct split is for you in a way that meets your personal financial goals that you were saying earlier around the different levels, but also in a way that's tax efficient?
Good question. So for most directors, there are 4 main ways that you can take money out of a business. So you can take a salary, which has to be declared through a proper payroll, and you would pay payroll taxes on that. Now, for most people, taking a salary of £12,500 up to your personal allowance is the most tax efficient thing to do, because you don't pay any income tax or personal national insurance on that amount. Your company will pay a small amount of employer's NI, but it also protects your eligibility to certain benefits like the state pension and things like that. So that's often a good idea. Dividends, as we mentioned, are taxed at a lower rate. So even though those tax rates have just increased as of April 2026, it is still slightly more tax efficient to take the remainder of the money out of your company in the form of dividends. But the third one, which a lot of people don't think about but is super tax efficient, is actually pension contributions. Your company can contribute to your pension on your behalf, and those contributions come out before corporation tax is charged. So that can be a really, really tax efficient way to look after future you from your business.
That's something I didn't know.
Yeah. And if you take money out of your business in any other way, so you've not done a dividend voucher, you haven't declared proper payroll, then technically that counts as a director's loan. That's okay in the short run, but if that gets much bigger than £10,000, or if it's still outstanding a long time after your year end, that can cause some tax issues and can result in you paying additional tax. So it's really important that when you do pay yourself, you do it properly.
So, for example, let's talk about director's loans.
Mm-hmm.
When you're starting your business, you might be putting some of your personal savings into starting that business.
Yeah.
And you can put that in as a director's loan.
Mm-hmm.
How do you pay yourself that money back in the right way?
So a director's loan, I like to think of it like a bank account between you and the company. So when you put money into the company at the beginning, it's almost increasing that balance of the amount that the company owes you back one day. Mm-hmm. And if that's a large amount, you can even charge interest on it at a market rate. Every time you accidentally use the company card on your weekly shop or put something through that you shouldn't and your accountant disallows it, they come off of your director's loan. Mm-hmm. That's essentially money that you used the company money for that you shouldn't have done. Mm-hmm. Every time you pay yourself, that reduces your director's loan. Every time that you declare a dividend or a salary, it can increase your director's loan. So that loan balance is a really good one to keep an eye on in your company's software to understand how much you owe the company or the company owes you at any time. In terms of what's the right way to pay it back, you can pay it back whenever your company's got the funds to do so. But I think sometimes people can rush to take that money back without thinking about the money that the company still needs to continue to grow. So if you can afford to keep that money in the company and can invest it to fund future growth, then that can be a good idea.
Because it's a loan, when you take that money back, it's not taxed, or is it taxed, or how does that work?
It's not taxed as long as you've got a director's loan balance that needs to be repaid.
It's really, really interesting. And what happens if you haven't put in money as a director, but you expense something that maybe you shouldn't expense? How does that work in terms of the balance sheet?
Then your director's loan essentially becomes a negative balance, which means you owe that money back to the company and you would need to invest some of your own funds to pay the company back the loan amount that you've loaned from it.
And are there deadlines around this, or this is a recurring balance that you basically just deal with?
Exactly. It's a recurring balance. If it ever goes above £10,000, then that has some tax implications. And also, if you owed the company money at the year end and that money still hasn't been paid back to the company 9 months after your year end, that can also have some tax implications. So it is important to try to make sure that you pay that money back when you can.
Really, really cool and interesting. In terms of the difference between salary and dividends, so if you're taking the personal allowance rate of salary and you live in London,
yes,
that's not enough money to afford your rent, groceries, needs, whatever. So how would you recommend founders living in cities or that they're trying to kind of create their monthly budgets of like creating a salary dividend split that actually sustains their life and their different levels of budget? Because if you're taking the money out of your company every month in terms of dividends, you have to plan that it's actually coming out of your profit pot rather than just how can you plan for that?
If you can, the easiest way is to try to get ahead of it. So at the beginning, to not take out all the profits that you have available and then to actually take some slightly larger dividends less often. So for example, in my company, I declare dividends quarterly. So at the beginning of the quarter, I then have a clear idea of what I can take out and what I have to live on for the next 3 months. And then as the company grows, I can assess how much profit there is, declare another dividend, that sets me up for the next quarter. That's a nice way of doing it to make sure that you've got some stability and you can have a budget in your personal life that feels stable, that you can rely on, but also something that you can tweak enough if the situation within the company changes. You can take dividends essentially as regularly as you want, but they do come with paperwork. So ideally trying to, get into a routine with how often that you declare dividends can be a really good idea.
And do you have advice around like planning so that there's always enough money in that pot in terms of profit? Because you could have lots of revenue coming into your company, but there's unforeseen costs. And actually, the more you scale, sometimes your costs increase as well. So you could be at the start of the year and lots of money is coming into your company, but in order to sustain all those new clients, you need new staff, new office, new tech. And then you realize that at the end, the number is actually not as big as you think it is. So do you have advice on how to kind of keep a healthy profit so you can continue to pay yourself?
I think when it comes to pricing, that's where small businesses, especially at the beginning, often get really caught out. Because if you come from employment and somebody says, I'm going to pay you £500 for a day of your time, you're like, awesome. That sounds incredible. But you don't necessarily think about all of the additional costs that are going to come out of that money, all of the other things that you're going to have to pay for that you wouldn't have done if you were an employee. So I think it's really important to look at the services or the products that your company offers and really do some analysis on, is that making you a profit? Because often I speak to business owners and they think they are making a profit on a certain service. And when we actually dive into it, they're not. In some cases, they're losing money by delivering the service. I once had a client where she was earning 80% of her money, offering a service that was taking about 20% of her time. And then she was earning about 20% of her profit from a service that was taking up 80% of her time. And we were able to completely cut that and essentially free up 80% of her diary. And her profit only decreased by 20%, which, as you can imagine, was a complete game changer for her well-being and really helped her scale her company. So just because it's bringing in a lot of revenue and taking up a lot of your day doesn't mean it's what's delivering your profit. So you need to be really clear on where your profit's coming from in your business.
This is so interesting, because I think it's this whole thing around like the Pareto principle, which is exactly what you said around 80-20 rule. But also, I think a lot of founders wear busy like a badge of honor. I did.
Yes.
And you think, oh my God, I need to prove that I am deserving of running this business, or I'm doing enough or whatever to myself, because you don't have a boss. And so you just keep ramming your calendar, and you realize that like doesn't necessarily actually bring revenue, joy, or help grow your business. And actually, you don't need to work super long hours. You actually sometimes need to take a step back and think strategically about what's working and what's not working for you. And so if you have lots of different services and products, what do you advise to kind of audit which ones are actually bringing in profit for your business and kind of rearrange your services menu? And how often do you think businesses should do that?
I think ideally it's something you should be doing at least every 6 months, but certainly as a minimum once a year. And the best way that you can do it is to really think about, if you're a service-based business, what is the true time that it takes to deliver that service? Often people really underestimate this. For example, let's say you run workshops that take an hour. It would be very easy to say, I'm being paid £500 for an hour of my time. I've got to travel to get there on the tube. That's going to cost me £5. Wonderful, incredibly profitable service. Well, what I would challenge you on that is, how much time have you taken to prep for the workshop? How much admin time is taken to organise the workshop, to invoice for the workshop? How much time are you not spending doing other things because you're travelling to the workshop, etc.? By the time you've recorded all of that, it might mean that actually the amount you're making per hour doesn't look quite as incredible. It might still be worth it, but it's about being really, really honest with yourself about what you're spending and where you're going, especially once you have staff. Because it might be that if you're paying a staff member to do that workshop, when you think about how much of their time it's taking up, that's when you might be making a loss.
Yeah, this is so interesting, because when I started, I would just cost things based on how much like resources I used. I wouldn't add my time as part of the expenditure. And when I started to think about it, I was like, no wonder I don't have enough money to pay myself, because I haven't been pricing properly. And I think this is a really difficult topic depending on the type of business you have. Especially for agency businesses, a lot of agencies don't put their prices on their website. So you don't know what other people are charging. So you're kind of just like guessing. It's really scary. And I think pricing is also something that's very emotional as well.
Definitely.
So what advice do you have around how to actually work out what your prices should be based on your costs? Like for someone who's not mathsy and someone who vibe prices, what advice do you have for them so it actually makes sense for them financially as well?
I think there are 3 things that can really help. The first is try to build a network of other business owners in your sector. People have all been there. We've all been there on day one and not knowing what to price. I've been there, even as an accountant. And having other people that you can talk to that can share their prices with you, even if they're not on their website, can be really useful to benchmark yourself against others in the industry. And if when you're doing your profit calculation, it's saying that you need to price £2,000 for this imaginary workshop and everyone else is pricing less, then you need to understand what's going wrong in your process. Do you actually need to be more efficient? Do you need to write a workshop once and then deliver it 10 times and stop over tailoring it in order to make your service more profitable? There can be options. The second is to speak to an accountant. I know, I'm biased, but if you have an accountant, especially one that works with other businesses in your industry, I get an insight into so many different businesses and their finances. And while, of course, all of that is completely confidential, I can often look at your prices and look at your costs and understand if you're undercharging and give you some guidance. So speaking to somebody that does understand the numbers a bit more than you can definitely be a good place to start. And the other thing is, don't be afraid to test the market. What I often say to people, especially in industries where pricing can be a little bit more opaque or you need to perhaps build up a reputation, is don't be afraid to raise your price every single time. And what you'll find is you naturally hit a ceiling where prospects start saying no. But actually, if you've got a 95% proposal acceptance rate and everyone's saying yes within an hour, you're probably too cheap. So don't be afraid to keep increasing those prices until you find your natural ceiling and your value.
And this is really similar to what you've just mentioned, but how can an individual whose business kind of revolves around their time, so like as you're saying workshops, cost an hour of their time? Because I feel like that's very like subjective of like not knowing, and you were talking about market value, not knowing. And I think a lot of people just think, oh, it's my time, it's my business, I'm just like, it's fine, it doesn't cost anything. But how can you kind of price your time, and what's the correct way of doing that?
A very general way to start if you're on day one is, if you're a freelancer, let's say trying to figure out your day rate, is to take your old annual salary and divide it by 150. And that gives you a very rough day rate that builds in time for holiday, for example, and overhead. So that's not a bad place to start. See where that number comes out as, and give that a test run. You can obviously then divide that again by a certain number of hours, but also be realistic. It's really easy when you first start to go, okay, let's say your day rate was £400, and then go, okay, I can work 8 hours in a day, so that means my hourly rate's £50. No, it's not. Nobody is ever booked for 8 hours in a day. It's impossible. Even if you were a freelancer completely at capacity, that's just not how freelance life works. So make sure that you're being realistic about the fact that an hour of your time isn't really an hour of your time. It's all of the admin time that goes around that, the travel time, the time to deliver something. So make sure that you build yourself in a buffer.
This kind of links to the emotional side of what you were saying earlier. What advice do you have for people who, when they hit that ceiling, or when they kind of say what their prices are and people are like, no, I'm not interested, they panic discount? And they say like, and they're like, okay, well, for you, it's like 50% off, or for you, it's 20% off. Like, how can you decide your kind of base price, your desired price, and your kind of discount price? Just like with your budgets, you have like the 3 tiers. Maybe you have like a little bit of leeway, but how do you calculate that buffer of how low you can actually go where it still makes sense for you?
My number one piece of advice, which might be controversial, is, at least in service-based businesses, never discount. Ever. But what you can do is negotiate on scope. Let's say that somebody wants an hour-long workshop and doesn't have enough budget to pay for what you want. You could offer to make the workshop virtual, because that's going to save you time and money. You could offer to make the workshop shorter. Maybe you do a half an hour workshop for their budget. So consider how you can tweak the scope to make it work for you and your budget, still be really respectful of your prices, but meet them where they're at. When it comes to product-based businesses, it comes back to when you were pricing. I always recommend that a product-based business is pricing, thinking about the future discounts that they're likely to offer. We are in a discount market where new customers want discounts. We've got Black Friday. You're going to want to be able to discount. You need to be building that in from the very beginning. I used to work at a company that is known for doing lots of sales, and I can tell you it was very much built into their profit margins, which on most things were huge, because they knew that most of the time when they sold a product, they were going to be selling it for 20, 30, 40% off, but they still needed to be making a profit even when they sold it at their reduced price.
This is so interesting and important to know. Thank you. A lot of people that listen to this podcast are starting out in their journey. Some of them might be student founders, some of them might be university students, some of them might be in their first job. And I think it's really hard from a confidence side, but also from an experience side, in terms of charging, in terms of running a business and being taken seriously and all of that kind of stuff. So do you have advice on like confidence and credibility with the running of your finances and the way that you price as well?
I think it's okay to build credibility. It's all right at the beginning to be charging a low amount that maybe isn't particularly profitable, but build from there. For example, I work with quite a lot of people in creative industries like graphic design. There is nothing wrong with doing your first few designs for a low fee, and then asking those people for reviews, building up a portfolio. Lots of people have to start in that way. I do a lot of public speaking now. The first few times that I did that, I was doing it for free, or I was doing it for a very nominal fee, whereas now that's something that I charge for. And a lot of people's businesses start in the same way. So there's nothing wrong with not being profitable from day one. There's nothing wrong with doing something for a lower cost occasionally, but you've got to have a plan for where you're going to take it forward from there. and don't keep undercharging.
I think that's a huge one. I was at a roundtable discussion about the funding gap and how only 1.8% of women get funding for their businesses. And there was a whole discussion around should women ask for more? And since the statistics show that only 12% get external funding, should women ask for more is more around pricing, right? Because it's like, if most of the female founder businesses in the UK are revenue first, then does your prices reflect that? And I think it's a really, really hard one. And like I said, there's a lot of emotions that go into that. And what you said about building your portfolio around free work. I think everyone wants free work. Speaking is a big one. In terms of creative industry, there's a lot of precarity. What advice do you have around when it makes sense to take free work for building your business and when it's kind of done out of anxiety?
It's about how busy you are. At the beginning of a business, when you're building it, when you don't have a lot of clients, perhaps you do have a bit more capacity to do things. I call it side quests, like a video game. And I allow a certain amount of time in my day, in my week, in my month for side quests, something like this, coming to record a podcast, speaking, like national media opportunities, things like that. The odds are no one's going to pay you to go be on BBC News, but that might be a good opportunity for your business. Yeah. So there are always going to be things that make sense to do for free or make sense to do for not very much money at all. But I think it's about trusting your gut on it. There will be times where I've done something for free or for a reduced rate. And when you send the invoice or when you get home at the end of the day, you go, I delivered a lot more value than I got back today. And it's about not ignoring that feeling, learning from it and going forward and saying, okay, you know what? I've now got the most I can out of doing this for free or doing this for a reduced rate, and going forward, I need to make sure I'm charging my worth.
This is so much. And I think, again, it's more about the confidence and the guilt. I was speaking, there's an episode in the season with a financial advisor, and we were speaking around this whole issue around morality and money, and not a lot of people feel ashamed of like wanting to make money and wanting to charge because they're scared of looking like a bad person. I think there's like a lot of layers of like confidence and anxiety that kind of need to be unpacked. So do you have any advice? Because I'm sure as an accountant, you deal with a lot of practical things, but a lot of emotional things with your founders as well. So do you have any advice on how to manage the anxiety and the psychology around your business and its finances?
I think it's important to recognize that, as you said, money is emotional. We all have a mindset and an approach towards money. And actually, a lot of research shows that 90% of that mindset is developed by the age of 7. It can have a real impact on what your childhood's been like, how you've grown up around money. And it's okay if it's something that you don't feel particularly confident about. I always say it's about understanding you and how you feel about money and then creating systems that make you feel safe. So for me, I like to make sure that I've got a nice, healthy runway that looks after my business costs and my staff. And that allows me to make the best decisions for my business without that fear of scarcity. I think the other thing that can be really important is not being overly reliant on one client or one income stream. It can be really tempting, especially when you win a really great piece of work and you're like, awesome, this can take up X amount of my time. If you have a client where you're listening to this right now and you think, if I got an email from them terminating our contract, I'm in real trouble. That's not a great situation to be in. So you always want to try to make sure that you diversify where your income's coming from to kind of create that protection as much as you can. And then the other thing is actually trying to act like you've got a financial problem before you've got one. And what I mean by that is when you're in the good times, when the money is rolling in, it's really easy to take your eye off your finances. I would say that there is not a business owner that I have met that when I go through their expenses with them, there isn't something that they could cut. There isn't some random subscription that they signed up for that they don't really use anymore. They haven't got 2 pieces of software that actually, when we look at it, maybe they can do the same thing and one can take over the role of the other. So really hold yourself accountable, put some time in your diary, diarize it, hold those costs to the scrutiny that you would if you just lost a client and you needed to cut back. And if you do that along the way, then your business will be more profitable and it's easier to then build up that runway.
This has been amazing. I feel like you've given us so much practical, actionable insight. Where can people find you if they want to work with you and they want to learn from you? And what other resources do you recommend for people who want to build out their own kind of curriculum of how to run their businesses and personal finances?
I make content online on Instagram and TikTok at Emily Vass. So if you want more of these kind of insights without needing to pay me any money, that's the best place to go. And then also nourishedaccounting.com. You can book in a call with me and chat with the team if you want an accountant that feels like they listen to your questions, we'd love to have a chat. I think in general, when it comes to educating yourself about your finances, especially for free as a business owner, there are so many great books. I know you're doing a book club side of this, which I definitely recommend checking out, but also just not being afraid of money and engaging it in a small way. There are some great creators that you can follow online that make really digestible content about finance news, and just not turning away from it, because if you can engage with it, then you'll feel confident, and it's that confidence that's such a game changer for managing your money.
Thank you. Thank you so much. This has been so amazing, and I've learned so much. I know the audience definitely learned as well. Since this is Reclaiming Bossy, I want to close with asking you what that means for you, if you've ever been called bossy, if you're reclaiming it, and any parting words that you have for our listeners.
I think as someone that's chatty and has always been chatty, even as a young girl at school, bossy is a word I heard a lot, especially at primary school, I think. And it was a word that for a while definitely made me feel like I needed to be less than, made me feel like I needed to be small. And it wasn't really until I was older as an adult that I realised through the work of others that it's a word I'd only ever heard used when talking about women. And actually, some of the people that inspire me most, the business leaders that inspire me most, are other women who have been called bossy.
Yeah.
And actually, in some ways, if someone uses that word, then maybe we're all doing something right. And for me, it's about being the right kind of bossy, supportive bossy, owning my boundaries bossy, knowing my prices bossy. And none of that is anything to be ashamed of.
Yeah.
And I think the people that are using it in a derogative way often just aren't worth your time. One of the biggest things I always say on social media is, if it isn't someone that you take advice from, you don't need to take criticism from them either. And you know yourself, and you know your values and what sits behind your business. And as long as you can look yourself in the mirror each night and know that you're building your business in a way that is aligned with what you care about, then I think you're in a good place to reclaim it.
That mic drop. Crazy. Wow. Thank you so, so, so much. I have learned so much. All the questions that everyone had have been answered. And there was a few around team, but I feel like we talked so much that we're going to have to bring you back for part 2 if you'll have us. But thank you so, so, so much. You are empowering, inspiring, and incredible.
Thank you for having me.